Good afternoon. This is Dale Snyder with the Snyder Group at Keller Williams Realty here in Las Vegas, Nevada. If you're catching this video, you might have found it from our newsletter that we send out once a month to our valued investors. If you're not part of that newsletter, feel free to shoot us an email at dale@dalesnyder.net. You'll also see the link at the bottom of this newsletter and in the YouTube video for our website and contact information for you to reach out to us. So let's jump right in. Obviously Las Vegas is a hot market for investing. It's ranked as probably one of the top 2 or 3 markets for being undervalued. Prices are way below replacement cost. We were about 70% below peak of the market. Now we're at about maybe 60 to 65, depending on which market we're in or which sector of the city we're referencing, to clarify. Prices have definitely started to come up. We've seen prices go up as much as 2% per month right now in our current market, especially in the investment sector. So before we go into the inventory, I want to just discuss a couple of things. I want to start with the Case Shiller, go into some local trends, and then just a quick discussion on the AB284. So let's start with the Case Shiller. If you're not familiar with it, which I'm assuming most of you are if you're part of this newsletter or you stumbled across our video on YouTube, this is some pretty good data. It's the 10 city or 20 city composite, where they watch the trends over the years to see what we're seeing in the marketplace. We saw all but 2 cities in the second quarter in the 20 city composite see increases in the equity position in homes. So let me just read this real quickly. We're also going to link this too, so you can get to the Case Shiller site and this specific article. Month-over-month average home prices in the 10-city composite were up 2.2%, and in the 20-city composite were up 2.3% versus May. So keep in mind that is just from May into the the quarter that they are referencing in the article. I know I may not be the clearest. I want to get through this video quickly, so we'll link you to this specific article. The national composite rose 6.9%. in the second quarter alone, which is an unbelievable turn in the market. So whether, in summary with this, whether you believe in Las Vegas or not, as a whole, the country appears to be recovering and coming out of the downturn of the housing market. Yes, we could have conversations about, the shadow inventory and, all of that, but I'll touch on that briefly, but I'd much prefer to have an educated conversation with you over the phone to discuss that. So let's move on to local trends, which is also going to tie us into the inventory. So the inventory is way down. We are seeing multiple offers on anything that makes sense. We are still able to get our investor's offer accepted, but you have to be very strategic in how the offer is structured. So it's almost what's the cap rate or cash on cash, not what's the list price. So you almost have to work your numbers from that direction and offer accordingly. And then get a little strategic. There are some tricks of the trade that we could teach on how to get your offers accepted if you reach out to us. And as far as local trends, obviously we could go into unemployment, which is the kind of the pink elephant in the room, so to speak. That's the biggest issue right now. Tourism appears to be recovering. We're seeing a lot of rebounds in other sectors. The builders are seeing a slow recovery, which could be counterintuitive to the market recovering, because if the builders start building too much, then we have more supply. But they're really building at a snail's pace, so I don't really see that impacting, and it's not at the investor price point. Touching on AB284, if you're not familiar with AB284, I suggest just going into YouTube and Googling it. There's a couple of my colleagues that have put very detailed videos together about the AB284, but that's really the big question mark, right? Back in October, that law came into effect that really put a bottleneck in the foreclosure process, which has really, I think, been the main catalyst for the inventory reducing. So obviously, inventory is going to go back up, but we don't have that much more distressed property to get through, maybe 70,000 units approximately, but we're going through about 30 to 45,000 a year. So we really are coming to the tail end of getting through this distressed inventory. That's obviously my professional opinion on that. You can talk to 10 people, they might give you different opinions on that, but that's my pulse on it. Let's jump into inventory. 180,000 and under is what I'm going to be talking about here. I'm not talking about the whole market. This is the investor newsletter and investor video. 4,000 properties active, 12,500 in contract, a little over 3,000 sold in the last 30 days. We have, hold on. No, that's wrong data. Let me back up. $180,000 max, 1,700 are active, 9,470 are in contract, and 2,000 sold. If we take the whole market outside, not just 180,000 and under, that's what we have for current inventory. So if you'd like to have an educated conversation on that, please reach out to me. I'm very excited to share with you a couple of things. On our investor newsletter, you will not see the data, but I do have an investor that has accumulated, excuse me, 5 fantastic properties in prime locations that he's willing to bundle and sell for $1.2 million. The cash on that is going to give you almost a 6% return. So feel free to reach out to me if you have an interest in pursuing this bundle of properties. Tenants are in place, properties have been rehabbed, so it is a fantastic opportunity to buy a bundle all at once. And then we do have 4 other single investment properties that we presented to you today. This is Dale Snyder with the Snyder Group at Keller Williams Realty. Feel free to reach out to me if you'd like to discuss our market. Have a great day.